Eric Muathe, Muathe.com. Let's take a look at a stock here that is giving us a chance to study the charts, and it is BLUE. Couple of observations here. The stock, since this breakout beginning, or let's say late 2014, the stock went on a nice run, and since the highs of about summer of 2015, the stock's been down. It looks like what traders could call, if I can draw it, something like that. In essence, it looks like a Christmas tree, right? So it's had the round trip, but there's a lot we can learn from this. Number one, if we take a look at the monthly chart, we can see that since the breakout, the initial breakout, which was a classic breakout, because we can see here that the stock moved to fresh all-time monthly highs on the monthly, and we also see that it moved above 69.1. So two things happened there. Number one, we made all-time highs on the RSI, which is a show of strength, or the stock is telling you it is at the strongest it's ever been, which is what we want. And then secondly, it jumped above 69.1, which launched this nice move, which continued on for a couple of months. And also, let's just rehash that the fact that it stayed above 69.1 from the price level here of about $40, somewhere in that range, in the 40s. It stayed above 69.1. Whoops. And it came down back below 69.1. Let's call it here in the 140s. So there's a 100-point difference from the time it went above 69.1 and when it went back below 69.1. I always tell people, because people always being taught that the RSI is a measure of how overbought or oversold, whatever that means, that a stock is, they tend to be confused when they see a stock move, let's say, in this area. They don't know what to do because they think the stock has to come down. Not necessarily. The RSI is a measure of strength, and I think it's called the relative strength index for a reason. When it moves above 69.1, it is at its most absolute strongest. So that's when you want to own the stock. So anyway, also something else we can, because as I said, this chart has a lot of things we can use to study markets. We can see the angle of penetration. This angle of penetration is the angle, so let's call this level, let's just draw a line here, assume that that line is the RSI being at 69.1, and the angle of penetration, the sharper the angle of penetration, as opposed to, let's say, something like that or something like that, the sharper the angle of penetration, the more acceleration you're gonna see in the stock, and the less the angle of penetration as you move above 69.1, the stock is gonna be doing relatively okay, but it's gonna be a slow moving, slow grinding stock. I believe that ultimately everybody's looking for stocks that perform like this one, and so what you're looking for is this sharp angle of penetration. Looks like a 45-degree angle. When it slashes through that 69.1 angle, be aware the stock is telling you that it is ready to do some business. Now if you take a look at that breakout, the first breakout here that brought the RSI to all-time highs, it also coincides with the MACD moving to all-time highs. So you got RSI meeting your minimum requirement, MACD is doing the same thing, bang, and that's when the stock took off. Now let's mention a couple of things before we go to the other side of the Christmas tree. But before we do that, on a monthly chart, you want to see at least 1 month of rest, right? There was no month of rest, and by a month of rest, I mean you want to see at least one down month before the next breakout. So anybody who was using this monthly chart did not get a fresh monthly entry based on this chart. So what you have to do is, if you don't see the buy signal or the sell signal on the bigger time frame, then you have to drill down to the next time frame. So we go to the weekly, and you can see that the weekly gave a couple of breakout levels. So there was and on the weekly chart, we need 2 weeks of rest after making a weekly high. So 2 weeks of rest after making a weekly high is what we need. And so there was a breakout here for a nice re-entry. There's another breakout here after exactly 2 weeks of rest for another entry into the stock. And there was no other breakout that lasted. Well, wait a minute. There was a breakout. Let me take a look. This week was slightly higher. So this was not a 2-week rest period. So again, we only had 2 periods that the stock gave us a classic more than 2 weeks rest period. If it's 100 weeks, that's fine. If it's 1 week, it's not a breakout. It's just a continuation of the rally. So you had a breakout here and a breakout here. So for example, this is not a breakout. This movement right there is not a classic breakout because you only have 1 week down after this weekly closing high. You need at least 2 weeks for it to be a fresh breakout. In other words, this is a continuation of this breakout here. I hope that makes sense. So let me just repeat that because sometimes it gets confusing. This is a fresh breakout because you had 2 weeks of rest. The subsequent breakout is not a breakout here. Why? Because you don't have 2 weeks of rest. So in truth, this is a continuation of this breakout that took place there. So we can see that the weekly chart gave us an entry, 2 entries, while the monthly chart did not. We also see here that take a look at the angle of penetration on the weekly here, angle of penetration here again. And that angle of penetration is one of the reasons why it blasted here and continued to trade very well. And net it stayed above 69.1 throughout this period here. And again, you can see that for a very nice gain. So let's take a look at that entry above 69.1, which took place, let's call it somewhere here. Price range would be at about the 40s again. It stayed above 69.1 for the most part. This was a slight blip for 1 week and back above 69.1. So for the sake of argument, let's just keep it at above 69.1. And also we see here that it moved back below 69.1 here in June, and that was at a price of about 170, 160 in that range. So if you use that idea that you want your stock to hold above 69.1, for the most part it kept you from the 40s till the highs here in the 160s, 170s. And that is not a trivial thing to know. Now let's go back to that monthly chart. And so we can see on the monthly a couple of observations. So we had the breakout to new highs was very important for the stock. Now we see the exact opposite, and it works the same way. At some point in August or September, I think it was August, we broke down to fresh lows on the monthly RSI. Since then, the stock has dropped from the, let's call it about $100, maybe 110, all the way to the current levels as low as trading in the 40s this month. Since the breakdown to all-time lows on the RSI. And that breakdown in the RSI on the monthly, which was a major sell signal, or the ultimate sell signal, also corresponds with at least one of the MACDs. So let's check that out. We can see that at least one of the MACDs was breaking down or about to break down to fresh lows here. Now there's another breakdown recently, and to answer a question, which is the reason for this video, but I also saw other things, so video is a little bit lengthy. And the question was whether the stock is a short right now, somewhere in this price range here at about $61, $62. But before we do that, answer that question, just a couple of, let's do some house cleaning first. You can see that the ideal sell point recently was here after 1 month of rest, which is this up month. So it had a nice positive gain during this month here. So the next time it comes and breaks through to fresh weekly closing low, below the previous weekly closing low there, and the price level there was at 77.13. So your ideal short period, or the ideal timing, would have been to short the stock or to sell it once it broke down below the previous monthly closing low at 77. So you can see it right now trading at 61. You've missed the ideal sell point on the monthly by a lot. And so really you want to find stocks that are breaking down and giving you fresh breakdowns so you can be part of this nice move. Also take note of the fact that right now, one of the reasons why the most recent break below 77.13 was a strong indication of lower prices is because we are breaking down here, as you can see, on the RSI to fresh lows. It also so happens that we are moving the monthly RSI below 50. As you move below 50, you get a big swoosh lower, which is exactly what's going on in my opinion. And as of right now, it is also consistent with the fact that the MACDs are right now trading in that window where the MACDs are already at fresh lows, RSIs at fresh all-time lows. So really from a technical standpoint, yes, the stock has broken down. Now is just to find out how you can get into a stock that you want to go short because it missed a minimum requirement, or the question is maybe you've missed the ideal period to short the stock when it moved below 77.13. So since we can't see a fresh breakdown level on the weekly, we have to go to the next smaller time frame, and so we go to the weekly. Now on the weekly, we can see that the stock recently broke down here on the weekly below the recent weekly closing low. So that was another level to watch, but we can see on the weekly the stock never gave investors a chance to wait for that trigger point because it gapped down, and the gap down level there that we were watching, or at least the previous weekly closing low that we were watching or could have been watching, was 71.39. So really in truth the stock did not give traders a chance, and sometimes that's just how it goes. If you had set an alert for the stock to trigger a sell signal or a short signal when it moved below 31 or 71.39, you never got a chance because by the time you get the trigger or the alert, the stock is already down substantially. And sometimes you just have to let these things go and find another one. There are lots of ideas at any point in the market that are more timely. So if you miss this one, there is no need to really I guess stress yourself. And so sometimes you just have to let it go and find the next opportunity. Now let's couple of observations here as we continue touching on some things on this video. Take note of the fact that here when the stock was moving gradually here and it based for a while, in other words, by basing I mean it was sideways here, it was forming a nice base or building a foundation for the subsequent move. It took a while, but you'll notice that it never broke below 50. It touched the 50 and would finally eventually go higher. And right now we are looking at a stock that is recently did show resistance at the 50 weekly RSI level, and which was this high here in the 140s. And if you're sensitive to stocks showing resistance at the 50 level, that was another trigger point to be aware that the stock was going to struggle. And I also see something else. You can take a look at this break in the RSI, recent break sometime in September during this 1 week down. That break has come into play again, because if you extend the same line, you can see that this is a backtest failure. So the chart's always full of critical turn points. So you can see here at about in the mid 90s, lower 90s, the stock did show resistance on the weekly based on this line here, which was the break line, being backtested and failing. Now I want to take a look at the daily, because something we can do here is a couple of observations. Right now on the daily, I'm not sure whether the stock is a short, because you can see we've been making lower lows, and recently we've seen an improvement in the RSI. So I would be cautious of that. That to me begs a little bit of caution because of this improving technical picture, right? Because you missed the ideal sell point on the monthly and on the weekly because of that gap down. Now, I would rather find an opportunity on the daily chart. As you can see, if we take a look at the daily break, for example, if we draw a line here, I would rather use this uniformity method where we see that the break point of the high was here, somewhere in the 180s, 170s there. Once the RSI broke down, which is right there, we draw a line from there, and you can see that every time we've come close to this line with uniform action, the stock was a sell. And recently we touched that line and the stock was a sell. That red line just happens to be coincidentally, or for some reason unknown to me, why stocks show resistance at a level around 61.8. So I would rather at some point the stock come to this level here and show resistance as a reason and a level to go short again. For now, I think the dailies are giving you an opportunity probably for even a move back to test the 50-day moving average. I know it's a lengthy video, but I need to add a couple of things. If you really need to short the stock, or you see the need to short the stock in the here and now, you have to use the recent daily closing low. So you set an alert for the recent daily closing low, and somebody might say, but wait a minute, the stock is really off the highs. I mean, you're talking highs here in the 190s, 180s, 140s, and here in the hundreds, and now you want to short the stock again. Well, who knows whether the stock is going to $10 or maybe even $6 or maybe $20, or maybe this is the low. We don't know. But what we can do is use discipline and put an alert. So the recent daily closing low so happens to be at about 52.55, not about, but exactly at 52.55. So you can set an alert and forget it. If the alert is triggered and the stock moves lower past 52.55, it would suggest that things are worsening, and that's where you want to go short. Just like as a visual example, just like if somebody set an alert during this daily closing low, once the stock jumped or moved below that daily closing low, that was a time to go short. If you use that strategy, it paid out very well. So did anybody who set an alert based on this low previously there. On hindsight, we can see that once the stock jumped below to fresh lows, whoever went short there had a chance of making some good return. And the inverse is true. You can see here, you set an alert on the daily high, and if the stock moves above that, you hold your nose and you do what? You buy it. So that was also successful. I'm just showing you ideal points. I mean, this is not, the stock market is not always going to give you ideal breaks and just gap up and go. But that's what happens when things are working out on the way up. And on the way down, we can see that the reverse is true, that when the stock is breaking down repeatedly, all you have to do is set some stop or some trigger point, that if the market triggers below that, maybe you want to take some type of a position. So I'm just showing you where the stock previously was breaking down. And so here at 52.55 on the daily, that's the next alert. All right. Now, just for the sake of making this video a little bit more useful for anybody looking at this down the road or studying charts, if you draw a line here on the hourly, this is now hourly, I'm using RSI period of 26. Every time recently the stock has been struggling to hold at this 61.8 level, approximately, slightly below the stock, every time it moves below 61.8 or moves below the red line, you can see that for some reason the stock has been struggling, even if it's for a couple of points lower, right? So we can see that as of right now, on an hourly basis, if it ever gets back to this red line and shows resistance, it might give you a chance to make an attempt at the stock going lower. That's one way. In other words, what I'm saying is there's more than one way to skin this cat. If you take a look at the recent hourly break and extend it, just like we saw on the week, was it on the weekly? On the weekly RSI, you can see that we broke down here recently. That break corresponds with this gap down, and now the stock is showing back test of this blue line. If, and it's a big if, we don't know, nobody knows, or at least most people don't know. If this is confirmed as resistance, then short term the stock is going to have to point down. Otherwise, short term, if it's to continue moving higher, it needs to move above that back test line, which is the previous recent break line there. So short term, you can also use that for a trigger point to either take a small short position, etc. But now let me go back to your question as to whether this is a timely short, and I go back to the idea that you already missed the weekly. This is the weekly, right? You already missed the monthly, which was higher at about 77.13. So from those two standpoints, your timing is not right now where it should be. And also on the daily, we can see the recent daily short level here also with a gap down. You didn't get a chance. So is it a time to go short? I'm not sure. I would rather find stocks that are breaking down and are giving me breakdown levels. So why chase when there are other ideas? Lots of ideas that can give you better entry points. Let me just share with you two that I see right now. Let's take a look at Williams-Sonoma, WSW. You can see here that if you use this previous monthly closing low going back to about October, November of last year, you can see that the stock is timely as a timely short. And let me share with you the level there to watch. As long as the stock is trading below 63.38, which is this monthly closing low, this is a timely short. Is it going to work out? I don't know. But all I can tell is that as far as the technicals are concerned, it meets the minimum requirement. RSI already trading at 3-year lows. So RSI on the monthly at 3-year lows. MACDs already at 3-year lows and below zero. The main MACD is just about to break down right now. So there's a timely idea as long as it holds below 63.38. There's one more, just sharing with you. You can see here EAT. This was a recent monthly closing low. It had 1 month of rest, which is what we need on the monthly. 1 month of rest. And the entry level there is if the stock stays below this recent monthly closing low of about 2 months ago. The level to watch there is 45.19, which happens to be this monthly closing low. Anything below that and the stock is breaking down could see lower prices. Does it mean that it has to go lower? I don't know. All I know is that on the monthly, it already broke down early in the year, broke down again on the monthly, and right now wants to break down again. As it moves to fresh lows, the risk is always lower prices. We can also see here that the MACDs are trading at 3-year lows and below zero. The main MACD already broke down to fresh 3-year lows. So there you go. Lots of stocks right now, lots of them that have this look and feel where markets in some sectors stocks are breaking down. So there are two ideas. Otherwise, I hope this answers your question as to the timeliness for blue. This is Eric Muathe at Muathe.com. Good luck, peace, and blessings. ESCS. Woo! Yeah! Woo! Yeah! Woo! Yeah! Woo! Yeah! I am out.